following is a technical analysis on XAU, spot price gold to US dollar, here off the daily interval, and within the midst of recent drastic global changes marked by rampant inflation, disruptions in the global supply chain, ongoing conflict in Ukraine, and a complex financial struggle involving major superpower world players like the US, UK, European nation, and Russia, including severe financial sanctions such as the seizure of the central bank reserves from China and Russia, the world's second largest economy, the misguided lockdown of millions in Shanghai and Beijing in response to COVID has added all as well turmoil through their economic structure, with combined factors just painting a all-out complex picture. And amid these circumstances, the suppression of gold's price through tactics like futures manipulation, coupled with the limited use of gold as a monetary asset and the dominance of now with what is a strong dollar, have all prevented gold from reaching notable price surges. Even the presence of speculative digital assets like Bitcoin has further diverted investment interest that would have otherwise hundreds of billions of dollars, $1 trillion market would have otherwise flowed into gold. And additionally, the existence of paper gold that doesn't represent physical holdings also influences the demand and value of genuine physical gold. And here we lie a significant turning point, I believe, a critical, monumental juncture, call it off a multi-year price support level off the 1911 382 Fibs retracement. Just a plethora of reactionary lows, reaction right across the board, reactionary highs, cutting right through 2022. And that is, we are now geared amongst a significant turning point, I believe, where we have this primary reactionary minor uptrend line off the 2022 November reactionary lows, cuts right through a ton of these reactions, and just a confluence of resistance levels that have been reacted upon amongst this key inflection point. And we have broken down on a daily sell signal there, perfectly back tested right to the button there, and was rejected impulsively off that close there. And here we are, we're lying right amongst that 19, trading that spot price 1332 price right above that 1911 75 major price support resistance there. And I believe a breakdown right below that key inflection point, solid daily candle close, would likely incur even more damage amongst some of the key technical momentum indicators space, beginning to break down right below their zero line dimensions. And I believe stochastics has already been felt right through, completely crashed down below its key inflection point, whereas long-term dollar cost investors could seize up an opportunity right around this key inflection point for ultra long-term inflection points, where I believe we've reached that juncture where bull traders and or long traders need to step in right now to avert the sell signal at all cost here, and gain momentum off this extreme beautiful triple bottom rally that ensued at the beginning of at the end of 2022, and which was the catalyst for a big move to the upside, and then ultimately putting in what we had a divergent high here with negative and bearish divergences on all three technical momentum indicators, which was the catalyst for a big move to the downside, and then just a ton of reaction amongst these key fibs retracement levels. Whereas you have a primary reactionary high of trend line here with a multitude of reactionary highs across the board there. And that is a significant turning point if and when we come across amongst it once again. So just a key inflection point. We have a major also additional resistance amongst the 50% fibs retracement, call it 1944.20 price resistance. And I believe that to be a pretty significant turning point as well. Multi-year inflection point where we could bull traders, long traders need to break above it and re-challenge that key primary reactionary high downtrend line, and then ultimately break above it for any prolonged move to the upside to keep some of the technical structure and the health of these momentum indicators in line, all within a healthier posture to the upside. Whereas again, bear traders, short sellers, they want to see a solid breakdown here and a surge in the dollar there, maybe even a potential back test, and then hone in to that next target at the 236 fibs retracement, call it 1871.60 price support there, and that will be the key inflection point to watch, where a breakdown below that key inflection point could usher in a big wave or a much larger wave of selling, whereas you have a potential posture of a head and shoulder looking top here, and that is on a longer term, the longer term interval here on the daily, and that I believe would be a significant turning point in a pretty strong wave of selling if and when we break down below the 1911.75 price supports. And I believe the next underlying trend will dictate where the next move will transpire. Now shifting our focus to the realm of the gold and silver miners, specifically GDX, which holds the largest component within the sector. An interesting, peculiar phenomenon occurred where there was a notable difference between the spot price of gold and the largest component of the miners, most notably Majestic Silver, ticker symbol AG, demonstrated an impressive surge of 5% within a single day. And that was an underlying trend here where we are at, again, a key inflection point off this 28.79 price support, just a multi-year factor of support here, continuous reactionary highs, reactionary lows, right across the realm, cuts right through a gap, additional gap there as well. And that is a big price support level right off the primary reactionary uptrend line off the September reactionary lows of 2022. And that is a significant turning point where we need a back testing it. Bull traders, long traders stepped in pretty impulsively, held that key inflection point, back tested once again, and then upheld it here on Friday. And they want to defend this key inflection point really at all costs. Whereas you have the 50-day moving average, 50 exponential moving average hovering in on the 200-day moving average, and a potential death cross bearish continuation pattern, which again can mark the pivot point for a bullish complete rally in the other direction when these key inflection points meet up across one another. Bull traders, long traders, they want to step in right now, right here, and sustain this upward trend and a complete revisit of the 30.98 price resistance and a re-challenging and a solid breakout above that key inflection point to hone in on that key target. Bear traders, short traders, they want to see a solid daily candle close breakdown below this key inflection point with the potential back test and a solidifying bearish head and shoulder looking top and a classic sell-off and a bigger wave of selling to restructure and re-challenge some of these key price and support levels down below.